Good afternoon, everyone. This is Al Hicklinski with Fairway Wholesale Lending, and we welcome you to our 21-day closing game plan session. Hopefully, several of you have participated in the course of 2017, as our goal has been very clear to you, our business partners. We want to arm you with the ability to close more loans faster. And the 21-day closing initiative was something we launched at Fairway at the beginning of the year and have brought a lot of attention and focus to it. And we're happy to communicate to our broker base and correspondent base that it's becoming more commonplace. It's becoming more of the norm. We're measuring it. We're looking at it. We're celebrating our successes internally, as you guys hopefully are celebrating them externally. But the 21-day game plan is all about arming you with the ability and the knowledge of what it takes to close loans quick. Some of you know. Some of this isn't going to be anything new to you. Hopefully you pick up one or two things that you can inject into your business, into your company, and it helps you. Okay, so if you go back to where we've been over the course of the year 2017, and you look at an interest rate increase. Look back at 12 months ago, we were down in the 3.5, 3.75 range, bouncing around somewhere around that range. Election hit in November, and we all saw that interest rate spike, and it shut the faucet off, the proverbial faucet that we've all heard about for 10 years in this industry. The refis are going to be on. Well, we saw that faucet really tighten up at the beginning of the year. In 2017, leading up to mid-May right now, has been a purchase year. And I would tell you that my outlook on things, I'm not an economist, but I read the same things you guys read, and we form our own opinions. My opinion is that the housing market in general is as robust as we've seen it. It's just that purchase business. There is refinance business going on out there. When you look at the breakdown of business, the projection of the MBA coming into 2017 was that purchases would increase by 10-15%, and refinance business would drop by 30%. I'd say that's probably pretty accurate. Maybe a little more dramatic with the refinance decrease. Maybe a little more dramatic with the purchase increase as well. So we find ourselves in a slightly different environment. But the facts are the facts. Mortgage rates are still historically at an all-time low and still are very attractive for borrowers, for home buyers out there. Go back and look at historical interest rates pre-2000, and they were well above 7, 8, 9%. The last 15 years, we have not seen interest rates above 6.5%. So we just looked at the slide that says we're a little elevated in comparison to last year, but we're still at a 4% interest rate. So things have settled a little bit, and we saw some market movement again yesterday. So 4% historically, grand scheme, still very attractive. Consumer confidence, several sectors of just the market in general, the economy, the U.S. industry economy, the machines manufacturing, it's as robust as we've seen it recently. A lot of activity, a lot of new manufacturing activity. Consumer confidence is high. Housing demand. We at Fairway over the last 6 to 9 months, we've penetrated some new markets throughout the country, and we're seeing some of these new markets are you're in bidding wars. It's not just a healthy purchase market. It's an aggressive bidding market, to go out and arm borrowers to buy houses quickly. So it really plays into what we want to talk about today. With increased purchases, with interest rates as attractive as they've been, we want to arm you with the ability to close loans fast. Okay, and you go back to TRID. When we rolled into TRID, everybody started talking about 45, 60-day closings. Now, I know that's no longer the norm out there, but, you know, you used to be something if you go into a real estate agent office and say, hey, I can close loans in less than 30 days. Let's push that, okay? And 21 days may be good in markets. It may be better than your competitors in other markets, and it may not be good enough in other markets. I'll tell you that, you know, we've been celebrating these success stories internally, and, you know, we just saw a closing last week happen in 10 business days. You know, that's 2 calendar weeks, 14 calendar days, but 10 business days. So when we look at the calendar and we talk about 3 weeks, 21 days, we kind of break it down into what happens each week. And, you know, next slide talks about a partnership. This is really, it's you doing your part so Fairway can do our part. I can tell you with confidence today, just like I told you with confidence back in February, we can consistently perform to our service level expectations that we set with you. You know, 2 to 3 day business day initial turn times on underwrites. Why that range? Well, it's because there are some stragglers. You know, there are some loans that take a little bit longer to work through, but generally speaking, 90% of our business is on the shorter side of that range. 48 hours. We've been focusing really heavily on improved rework turn times. Okay, it's great to have a 24, 48-hour initial underwrite, but we also feel like we need to arm you with rework speed. You know, once we get the initial underwrite, how quick can we get it to the table? So when we look at how do we get you to 21-day closings, break it down in the first week. You know, your responsibility week 1 is to get that application to Fairway within the 3rd business day. That puts a lot of pressure on you. Okay, and that's probably the biggest variable that we see, and the biggest driver of, you know, why can't we do all our closings in less than 30 days? Well, I'm happy to communicate to our client base that more than half of our loans last month were closed in less than 30 days from the date that you submitted to us. There's this whole time frame that the loan exists out in your world. You know, and let's look at days 1 through 3 up here. Take the application, get the initial disclosures out, get the initial float LE or the appraisal, capture all the necessary documentation per the AUS, you know, and then submit, basically package up and submit a complete credit application to Fairway. If you can do that in 3 business days from the application date, you can close loans in 21 days consistently. If you can't do that in 3 days, maybe it takes you 5 days. You're just going to add to that 21 days, however long beyond 3 days it takes you to take an application, process it, get everything disclosed, and get it to Fairway. You know, the extreme cases in our world, we see some sit out there 15, 30 days. You know, and it's just, you know, the 21-day closing doesn't work for every transaction. But what I want you to walk away from this presentation with is confidence that if you participate and you perform on your side, when you have the confidence that Fairway will deliver on our side and enable you to consistently close loans in less than 30 days. Maybe you have an outlier. You know, maybe you get this discipline down where you can take applications, package them up, and deliver them to Fairway within 3 days. But every once in a while you have an outlier. Those happen in our industry. Okay, this is the cookie cutter plan. Well, the reality of wholesale is we're not cookie cutter. You know, and things happen, which is why we feel strongly that the Fairway model arms you in those situations to still stay on course. Pick up the phone, talk to an underwriter. Pick up the phone, talk to your operations managers. You know, certainly you have the AEs at your fingertips, hopefully, but the underwriters, operations managers, your team leads within the operations teams, these folks are empowered to work with you to meet your objectives. Okay, so week 1, get the loan to us within the by the 3rd business day. That enables us In our extreme with 3 business days on the initial underwrite, it enables us to get that approval to you beginning of week 2. Week 2 is all about conditions, getting that underwriting approval, working towards the underwriting approval. But pay close attention, on day 11, we've got to be at the end of week 2, we've got to be focusing on the closing. We've got to start looking at the CD's got to go out. We have a time frame from the date that the borrower receives the CD. We rephrase that, the date that all borrowers receive the CD. That's our trigger date as far as the closing is concerned. So we have to, at the end of week 2, we have to start preparing ourselves and enabling us to close quick in week 3. Well, it starts by getting the CD request into our team. That enables them to start working on that CD. Reminder, at Fairway, we do not require the clear to close to be issued in order for us to issue a CD. We have defined the state that the loan is approved. We have the appraisal reviewed by the underwriter. We have title work. We have hazard. And the lock is good through closing. All these things that really impact the fees, and the manner in which the loan will close, those have to be near complete. So we've defined that state and said, once you get here, request your CD. Okay. Again, that leads us into week 3. You see, day 16, we're getting our clear to close. So that really gives you week 2. It gives you 2 turns in the underwriting, should you need them. Those are 2 quick turns, 2 quick touches, week 2. So it's, rework number 1, rework number 2 to get our clear to close issued at the beginning of week 3. While this says, submit the closing request, same day you're getting a clear to close, what our ops managers would really encourage you to do, what I'm really encouraging you to do, is work ahead on that. As soon as you get that CD request in, you have all the information you need to get that closing request in. Work ahead. You want to consistently close loans in 21 days or less, you have to be proactive. So that's all great, but really in the world that we're in now, it's what is the desired closing date? And then you have to work backwards. So we put a little job aid together for you, and we have this posted on the website, and we'll send the slide deck out, and we'll send this job aid out in conjunction with the slide deck to all of our webinar participants today. All this is an Excel spreadsheet that we put together to help guide you through the process. So the only data entry you have to make to this Excel spreadsheet is the desired closing date. Updated one this morning, you can see, if we put in a 6/23 closing date, we need to be taking that application by June 2nd. And that's in that 21-day game plan. Okay. Certainly, if you took it before then, you need to be submitting the credit package to Fairway by the 6th to get the approval by the 8th. So it's defining the closing date and working backwards to give you target dates throughout that process. Simply a game plan. This is not earth-shattering news. We are not reinventing the wheel. We're just saying we're here to consistently deliver. Here's dates that if you hit these dates, you arm yourself with a competitive advantage within your marketplace. Again, you need to be faster than 21 days. We can be faster. Shared with you just a second ago, 10 business days. I believe you can walk into any real estate agent and earn business by being able to close loans in 10 to 20 days. So as I just mentioned, as we're looking at the calendar, this is a partnership. This isn't magic. We can't take a half-completed application and close loans in 21 days. It's a partnership. If you perform, as we've just looked at, in your time frames, Fairway will perform in our time frames. Just to kind of go over these weeks again and talk a little more in depth about what goes on, and share a little feedback from our operations team. Walk you through not only what we need to accomplish in those weeks, but what prevents us from accomplishing those tasks during those weeks. As I mentioned, week one is all about getting the file into Fairway and getting it into underwriting. Our setup team is operating typically, I'm not going to go as far as saying same day. A lot of loans that come in the morning are getting in underwriting that same day, but I can commit on this call 24 hours. Setup team has it into underwriting within 24 hours. So if you take an application on Monday, your goal needs to be get that to us Wednesday, Thursday, so we can get into underwriting that week. That sets you up. That sets the table to enable that loan to close. That starts us off. When we look at what could potentially hold up a file from going into underwriting, missing documents, some compliance critical documentation, acknowledgement of the homeownership counselor, disclosure, state-specific, program-specific forms, the Patriot Act, the Home Loan Toolkit acknowledgement. Those are all compliance-required documents that need to be captured up front. We see a lot of loans that aren't run through our web portal. So reminder, you do have the ability to upload a loan into our website and run it through DU. If you don't, if you're out there using DO or LP, those AUS findings need to be assigned to Fairway prior to your submission of the loan to Fairway. As you know, that gives us the ability to go in and work with that DO case file, and as we go through underwriting, update it, rescore it as necessary. But it's important, as we do that up front, as opposed to getting it in underwriting and be a condition for underwriting to issue an approval for us to get those AUS findings assigned over to us. Incomplete or unsigned 1003, we're looking for the initial 1003 to be signed by the LO. It needs to be signed by the LO before it goes out. If it was a mail away or email out to the borrower for e-sign, you need to sign that. So we're looking for your signature on that initial 1003, or the loan officer's signature. I know this is not purchase related, and we're talking about purchases in this, but I do want to remind everyone that compliance, audits, everything, all the feedback that we're getting right now, we need to be diligent in the use of the alternative LE in conjunction with a refinance transaction. So, look, we don't differentiate. Certainly we prioritize purchases, but we don't differentiate from a loan file. A refinance transaction is going to be submitted and experience the same service levels throughout the process. So even though we're talking about purchases and closing purchase transactions in 21 days, there's nothing to say we can't, and we consistently do, close refinance transactions in the same time frame. And then the last bullet point, this is, continues to be an issue. And this comes and goes, but incomplete or missing 4506T and rejects with transcripts. So let's expand on that just a little bit and remind you some items on those 4506Ts that need your attention. Number one, Fairway is not accepting electronically signed 4506s. We need wet signed 4506s. So if they're not wet signed, it's causing a delay. If we have a 4506T that's been faxed and copied and faxed again and signed and copied again and scanned, it may appear legible to you, but we're getting a lot of kickbacks right now for illegible 4506Ts. Make sure it's legible, particularly if we're using copies and scans and faxes. The attestation box left unchecked by the borrower at the time they're signing it. And these are simple things, and I know they're minor things, but they're causing rejects from either our vendor or from the IRS. Exact names and addresses not matching the tax returns. And we understand that borrowers move. And 2 years ago they may file taxes at a different address than they're currently residing. It needs to be a question that we're asking during the origination of the loan, during the application. Did you reside in any other? You are capturing that information. If they resided at other locations, other properties, and file their taxes under different property addresses, those need to be matching what we're submitting for the tax return and transcripts. Just a reminder to all of those brokers and correspondents who aren't currently using this service, Fairway does provide a platform through one of our vendors, CIC Credit, for you to initiate and facilitate that 4506T order. And that's not at any additional cost to you. It's a platform that you initiate it. You'd manage any rejects, any reasons for rejects. You'd manage that. And then once it's returned, we have the ability to go into CIC platform and pull those directly from the platform. So again, it's both for brokers and correspondents alike. We would be more than happy to see more of our brokers and correspondents participate in that platform. That's something that, during that first 3 to 5 days, that needs to be addressed. It does not need to be a reason that we're holding up a loan in submission or in underwriting. So we've had some updates to our websites, and just wanted to point out that you now have a Forms and Documents button on your main landing page. When you log in, your main landing page has gone through an upgrade, through an update. We've added some things, tried to make some things more clearly located, more available to you. So Forms and Documents button, we've updated the whole Forms and Documents page, broken it down by different categories. All your different transactions have a checklist. We strongly encourage the use of those checklists. You have some great processors that do wonderful jobs, but we also realize that lenders have different practices. And if you'll use our stacking orders, our checklist, you will be submitting a very clean file to us that arms us and you with the ability to close loans quickly. Reminder that not every document under the Forms and Documents is specific to Fairway. But the 4506T that's posted on our website is specific in that it has specific vendor information that we need. Make sure you're using the most recently updated documents. And so on a regular basis, I would just simply encourage you to go to the website and pull up the most recently updated document and download that if you're saving that, if you're putting that in your LOS. Use the ones that we have updated. We try to update those as needed, and then when we do update documents, we typically put out a client announcement, let you know that documents have been updated. Please use the updated document, and that we typically link where they're posted as well. So trying to arm you with, again, all the information you need in working with Fairway. So week 1 was all about getting the file submitted to us so we can get it into underwriting by the end of the week. Week 2 now, shift focus to the underwriting approval. Okay, submit our goal by the end of week 2, the last Thursday, Friday, or whatever happens to be, when we're looking at business days, business day number 8, 9, and 10, we need to be submitting final conditions. Additionally, as we talked about when we're looking at the calendar, we need to be focusing on the closing. As you're submitting final conditions, even prior to, as you're gathering final underwriting conditions, getting ready to submit them, that is your trigger to start working on the closing. That's your trigger to work on the closing, the CD request. Again, encourage you to be as proactive as possible. If you question when, we can certainly drill down and do some workflow trainings with your team and talk about ideal workflows and when that state is, approved with appraisal being approved or reviewed by the underwriter. Your hazard, your tax, all that information. Typically, as you're submitting your final set of underwriting conditions, you have all the necessary information within that file for us to prepare a CD. In the ideal world, 2-touch files are our goal. That's what we're working towards. That's the initial underwrite and 1 rework by the underwriter. But again, as we looked at the calendar, This 21-day game plan allows for actually a 3-touch file, 2 underwriting reworks. If your focus is 2-touch files, you are setting yourself up for success. Some common delays that impact the underwriting approval. Explanation for issues that are out of the ordinary. We still are in a world where communication is key, and you communicating information over to us that you know about the file, letters of explanation about certain job employment situations or income situations or credit situations. Those are valuable to the underwriter. Remind yourself that the underwriter picks up a file that they know nothing about, and they start working through this imaged file that's indexed. They start working through these documents. So instead of having them guessing at what's going on with this borrower, give us a little insight to it. Illegible or out of order documentation. Certainly we already talked about the 4506T as being one of those documents that's faxed, signed, copied, scanned. Be aware that impacts us, and hopefully our underwriters are clear in what they're asking for out of illegible documentation. If not, pick up the phone, talk to your CRS, talk to the underwriter. Again, we believe that open line of communication is critical, and not only in timely closings and just developing the relationship and the rapport, with Fairway as your lender. We already talked about the AUS findings not being assigned, so if it's not happening before, this is potentially holding up an underwriting approval. Incomplete missing documentation, or data entry. Those are all things that are critical for our underwriters to approve that loan, hopefully on that second touch. Then we shift to week 3. As we talked about when we're looking at the calendar, it's all about the closing. Okay, hopefully we're coming into week 3. You've already submitted your final conditions. You've already submitted your CD request. Now it's all about having a smooth closing. If I went back to the calendar, we are really focused on getting closing docs and funds to the closing agent, to the settlement agent, the day before closing. That's our objective. Okay, again, you have a role in that. We have a role in that. If we do that, you earn repeat business. And we've all been a party to a transaction that was thrown together at the last minute, the 11th hour of the day, and the borrower walks into closing and it's not ready. Then they have to wait. Then they've gone to dinner, and then they come back and sign. That's not earning us repeat business. The ideal closing, in fact, I just talked to a good friend of mine who went through a closing. He said, Al, it was the best thing I ever experienced. I walked in, I signed both. He was selling a house and buying a house in the same transaction. Documents were ready. I signed in 20 minutes. Best closing of my life. That earns you repeat business. That testimony, that guy's going to go out and tell everybody he knows about that experience. Likewise, if it was the opposite experience, he goes out and tells everybody as well. Okay? And we all know that we respond to those negative testimonials, and we avoid doing business with those people. So it's all about earning you repeat business. Week 3 is all about closing, getting the closing docs to the settlement agent a day before closing. Again, Fairway is in the practice of wiring funds the day prior to closing. We want it to be as smooth and represent you in the most positive light as possible. Some common delays for closings. This first bullet point really goes back to the CD request. License information for realtors, title companies, or the closing agent. That information isn't always available within the sales contract or within the credit file that you've provided us. So on the CD request, page 1 of that CD request, we're asking for specific information on both real estate agents, the title companies, or the closing agents. It's critical. Missing invoices to be collected at closing. Okay. Our CD prep teams should be asking for invoices. And that's a critical piece of trying to be as accurate as possible with those CDs that are going out to the borrowers. We need them, and we don't want it to delay anything, either the CD delivery to the borrower or the closing. We ask for, at the time of your CD request, that you give us a draft of the CD from the title agent with their fees. Okay, we're trying to marry up fees and trying to make sure that everything's accurate when it's going out. Certainly, last-minute changes, the critical loan data could delay a closing. QM points and fees issues. Typically, that's not such a prevalent issue, but it does surface. And it surfaces when you are locking loans with discounts and assuming that they're bona fide. Okay? If you're locking loans with a discount and we're tight on QM points and fees, that's something that start addressing that early with your CRS to determine whether or not the discount points are bona fide. A lot of times they are, but it's a process. We view discount points as non-bona fide until we go through the process of requesting them to be analyzed and deemed bona fide. That's an internal request, an internal process. It's got to be triggered by somebody. And it typically when the points and fees are tight is when it comes into play. And then failure to submit closing request prior to the clear close, and then again failure to submit your CD timely. Both of those could potentially delay your closing. Want to remind you, effective May the 15th, so on Monday, Fairway deployed our approved settlement agent requirement. We're using a company, a third-party vendor, by the name of Secure Insight to perform our due diligence reviews. Fairway went out to every settlement agent that had closed a loan with us over the last 12 months, and our entire company network. We went out to them over the last quarter, been going out to them and asking them to go through the process of the vetting process through Secure Insight. In fact, we covered the cost, the expense of those due diligence reviews for all those settlement agents that went through the process when they were asked to. So now we have developed an approved closing agent list. We're still working on getting those together so we can share that information with our CRS teams, our setup teams. I can tell you that our setup teams are looking at that when loans come in and the settlement agent is defined at the time that they're submitted to us. We're looking internally, and we're trying to head off that issue, any potential issue that could delay a closing. Once they become approved or vetted, they're approved with us. They're an approved settlement agent with Fairway. There's the website to Secure Insight. It's just one of those things that we ask you to be proactive with. Once we go through this over the next 3-6 months, hopefully we've vetted and those most commonly used settlement agents are approved settlement agents with Fairway. Shouldn't be an issue, as I know that the vast majority of the lending community has adopted some sort of vetting process for settlement agents, and this was in response to some CFPB requirements of ensuring that we're protecting our borrowers, protecting Fairway, as well as protecting you in the process. If you have any questions about Secure Insight, we can certainly drill down on that and work with you on an individual basis. But again, just know that Fairway has been proactive with this and has reached out to as many closing agents as we have worked with over the last 12 months. Whether or not they went through the process is another thing. But it was not a one-time effort on Fairway. It was a consistent effort leading up to May the 15th. Again, we've talked about some changes to our website, and just want to point out a couple training videos. We've created quick clips, a series of 7 quick clips that you may know Fairway's portal, but your processor may not, or you've hired new loan originators, or you've hired new processors. These are 90-second to 120-second clips of step-by-step processes to go through performing these actions within our website. From registration of the TRID docs to submitting a loan, to product and pricing, uploading your underwriting conditions, even through ordering a CD and requesting your closing. So those are there available to you. Again, if somebody's not familiar with Fairway, this is a great tool. Don't ever hesitate, though, to reach out to us and ask us for training. We have created what I would say is, I refer to it as a robust onboarding team. You have production support specialists within each operations offices that are here to help you in any way that we can. Our onboarding specialist is very involved in trainings and would be more than happy to work with you or your staff on an individual basis to provide you any training that you might need. Guidelines. We have our guideline platform linked to our main landing page. When you log in, you no longer have to log into our guideline matrix. You just have to click on the guidelines button. It's going to launch you into what's referred to as Knowledge Owl. That's our internal platform where our credit policy houses all of our product matrices, all of our guidelines. I would advise you to, when you go in there, if you'll click on wholesale product matrices, that will pull up your list of conventional FHA, VA, and it's easy to go in and drill down into product guidelines through those wholesale product matrices. That's your second selection from the top. Pretty robust platform, has a search function with it, and it's intuitive. The search function continues to get better as we work within that platform. You have your Web Center guide. Okay, this is the complete page-by-page Web Center guide. You also have quick website guides, smaller step-by-step instructions of working through the website. So all of those buttons under the resource will launch these pages for you. Pull it up, use those resources. We already talked about the forms, documents and forms page, some miscellaneous forms, and one of them that's been added as of late, we updated our borrower's acknowledgement of e-consent and electronic disclosures. E-consent is critical to enable us to deliver our LEs and our CDs electronically to the borrower. This is a 2-page document that has been prepared for you to hand to your borrowers and say, hey, you're going to get these emails, you're going to get this request from Fairway, our lender that we're working with. Please make sure that you acknowledge, give us consent, and acknowledge deliveries. Your timely acknowledgement is critical for us to be able to close loans. So that conversation with the borrower, giving them this guide, hopefully enables us to capture the e-consent and enables us to deliver documents electronically. If not, we're mailing them. And what that means is you revert to the mailbox rule. So where I can electronically deliver a document to a borrower, they can electronically receive it today, and that's the date that we start working on, versus I have to mail them today. It's assumed that the borrower will receive them on a 3rd business day after I mail them. So that date of receipt is critical, particularly when it comes to the closing disclosure. And that receipt date triggers our ability to close 3 days after the receipt date of the CD, the initial CD. So e-consent's critical. You have a lot of other documents and forms that have been updated and posted to the website for your use if you don't have them through your LOS. So again, if you have any questions about any of that, any of the documents, any of the website updates, please don't hesitate to reach out to us. One of our favorite resources that we always push and we're very proud of is our Ask Desk. This is manned by our credit policy team, and it is very responsive and can help you with just about anything that you need in working with Fairway. We try to limit scenarios, underwriting guideline questions. But when you don't know where to go to the Ask Desk. Okay, not just the credit policy team is seeing those emails, but a lot of folks on the production team as well as our operations team see those emails. And the whole goal with the Ask team is to respond quickly to your needs. So when you send something to the Ask Desk, typical response within a couple minutes is going to be, "I got it." Okay, and typically that's coming from Terry Messina. She's the lead on our Ask Desk. "I got it" means she's telling everybody else on that distribution list that sees those emails that she's handling that, and then she'll respond to you directly, with specific feedback to your question. Use the Ask Desk. Again, it's one of our strengths. If you're new to working with Fairway, this is key to your success. So, we talked about closing loans quickly. We believe that it arms you with a competitive advantage. Okay? You can compete with the banks. You can compete with other retail operations within your market. You can separate yourself. If you go back to what we've done throughout the course of this year leading up to now, May, hopefully you've participated with several of these webinars. They were product specific. We started with Fairway best practices, getting you geared up to closing loans quickly. Now we want to expand. We have been expanding your knowledge base of other products. We dug deep into the VAs. We will continue to dig deep into the other high LTV loan programs out there for you to take advantage of. In June, we'll be offering you a training session on the Home Possible and Home Ready programs. Fairway recently rolled out the LPMI capabilities to use in conjunction with both of those programs. Great programs and great alternatives to FHA lending. There's so many programs out there right now available to you for first-time home buyers. Again, hopefully you've been participating on our webinars. If not, we've got those slide decks. We'd be more than happy to circle back with you on an individual basis and do any training that you might need. So, Allie or anyone else that's been monitoring that question box, do we have any questions?
Yep, sorry, I forgot to take myself off mute. So Melanie is asking, she has kind of a couple questions. She said, we've experienced plenty of 21 or less days clear to closes. Are there suggestions for better chances of getting docs 24 hours before closing? Because that's our biggest issue. We end up getting documents same day as closing, but what adjustments can we make?
So, what I'd like to do, Melanie, is probably drill down with you on some of your most recent closings and kind of do a little research on those to determine what might be going on with those, determine when the clear to close is coming. If the clear to close is coming out the day before closing, that certainly impacts. If I go back to the calendar real quick on that. Go back to the calendar and we look at this. Our service level commitment to you on our closing package delivery is 48 hours from the clear to close. And so when that clear to close is coming in later, it pushes our ability to get docs out before the closing date. So if we look at day 16, clear to close is coming in day 16, we've had that closing request. 48 hours takes us to day 18 and we close on 19. So that's probably the area that I would focus on. Also would focus on whether or not our title or settlement agent is being responsive on the CD, the numbers, the reconciliation of finalizing the CD, that whole process. Those are the two areas that I would probably focus on the most. But Melanie, let me go back to my contact information at the bottom at this last slide. If you'll email me I would be more than happy to look into the last couple closings that you've had, do a little research, and follow back up with you. Because again, it's as we just discussed when we were talking about that third week. If we've had a 21-day closing, yet that bar doesn't have a positive experience at the closing table, you know, we didn't do each other favors. So maybe it would be better to have a 24-day closing, you know, and get the docs there beforehand. But I realize, hey, you don't always have that luxury. I realize when we're talking about purchase transactions, you get a contract that says we're closing on this date. So, you know, go back to some of the tools we've talked about. Go back to the 21-day closing game plan. Maybe utilize that in some of your next closings or your next loan transactions. And, you know, just, again, communicate with me. I'd be more than happy to drill down and look at that. But those two areas that I told you, you know, the clear to close and the time frame from the clear to close to the actual closing date, or how responsive our settlement agent is being. You know, if it's something else other than that, I'd love to know if, you know, there's reoccurring delays that you've experienced. Did you say there were more questions associated with that, Allie?
That was hers, and she said, thank you very much. And I had one other question from Jennifer. And Jennifer said, is there a way to save your scenario in the pricing engine so you don't have to re-input everything each time?
Lonnie, are you on the line?
I am.
You want to take that?
So I don't believe that there's a way to capture other than when you have gotten your scenario you want, there is a button that you can click that says print friendly version. That would be the only way that you would be able to save that information. There's not a way for you to save without locking it to capture what you've put into it. So you can go through the whole lock process, the product and pricing, go through all of your screens, and when you pick, I think you have the option of either locking, update encompass, or print-friendly version. That's where you would want to save that, and then you would just have to put something in your file that way.
Thanks, Lonnie. You know, my thought is if you're going into the product and pricing directly and you have not imported the loan, that's really the most, you know, that flow of obtaining a price quote would be where you have to enter most of the data. But if we're importing a loan and we're working off the imported loan, most of that data should flow through. So, you know, Jennifer, if there's certain things that you're seeing not flow through, I know when we go through the product and pricing, you do have to identify lender paid and then how you want the admin fees charged to the borrower built in the pricing. But those two data inputs in that optimal blue screen should be the only data inputs that we're really having to put, you know, when we're going to obtain a price query. So, you know, again, I'd offer, you know, shoot me an email if you've got specifics that I can look at and drill down and try to do a little research on. Any other questions, Allie?
Nope, that was it.
Okay, so, you know, just in conclusion, as I mentioned at the beginning of the presentation, hopefully 1, 2, 3 different ideas or practices, you know, have surfaced throughout this presentation. It's not reinventing the wheel by any means. It's simply putting in, you know, a user-friendly format, which I'd like to say is the ability to close loans quickly. It's arming you with the vision of what has to happen and the time frames that have to happen at in order for you to close loans quickly. Go back to, you know, what I talked about earlier. One of the biggest delays, or the two areas, let's call it the two areas of delay that we see, you know, with transactions that don't close in less than 30 days, is the time frame from when you create that file, you know, which is really, I would assume, your application date, somewhere close to it, and the time you actually submit the loan to us. That's critical, okay, and that's critical time and days that we either gain or lose. And then the second area that, you know, we see the biggest time frame is from the time that it's initially approved to clear to close, you know, and the number of touches in there. So those are two areas that we feel like you have the biggest responsibility or the biggest involvement in. And then it's just working ahead, being proactive with that closing piece, knowing that as you're working on those final conditions, shift focus to closing, you know, and trying to get docs there the day before. The smooth closing is the objective. So thank you for your participation today. You have both my contact information right there as well as Lonnie's contact information. We're certainly available to get involved with anything that we can. We feel like we have great teams. We're very proud of the operations teams that we have. Thank you for participating. Thank you for your business. And hopefully you participate in some future webinars that we can continue to enhance, you know, your product offering and what you take to your marketplace. Have a great afternoon, and thank you for using Fairway.